All right, let's just forget everything you think you know about accounting for a minute. We're about to travel 400 years, from dusty, secret ledgers all the way to the transparent world of blockchain. And why? Because, this isn't just some boring history of numbers. It's the story of our relentless quest for financial truth.
So what on earth does a 17th century merchant have in common with a crypto developer today? It sounds like the start of a bad joke, right? But the answer is actually surprisingly simple, and it's everything. It all comes down to a desperate need for trust, for verifiable proof. That one single idea is the thread that's going to connect everything we're about to explore.
Okay, so our journey has 4 main stops. We're starting way back in the age of the ledger. Then we'll see how that turned into the age of the report, followed by the age of perception, and finally we'll land right where we are today, the age of proof. You ready? Let's dive in. Our story begins in a place you might not expect, not with transparency, but with the total opposite, secrecy and legal defense. This first era is all about accounting as a private tool, basically a shield for business owners.
And here's something that might just surprise you. Early accounting had absolutely nothing to do with being open with investors or the public. Nope, it was a weapon. A detailed ledger was your shield in court, the one piece of hard evidence that could save your entire business from ruin.
So just how seriously did they take this stuff? Well, get this. In 1673, a French law made bookkeeping mandatory, turning those private ledgers into official legal evidence. And the penalty, if you didn't comply, it could literally be death. No joke. That's how vital these records were to the entire system of commerce.
And of course, when the stakes are that high, you can't just have anyone doing it. This created the need for a specialist. And boom, just like that, you have the birth of a brand new profession, the bookkeeper. The person entrusted with keeping the records that can mean the difference between ruin and success, or even life and death.
Okay, now the world starts to change big time. Companies are getting bigger, and for the first time, the people who own the company aren't necessarily the ones running it. And because of that, the whole purpose of financial records is about to get flipped completely on its head. This quote right here really nails the turning point. A new law comes along in 1867, and it forces public companies to open their books. All of a sudden, accounting wasn't a private shield anymore. It was a public statement. That is a huge revolutionary shift.
And this massive pivot brings a whole new cast of characters onto the stage. First, you've got the board of directors. They're the agents running the company for the owners. Then you have the auditors, the verifiers, whose whole job is to check the board's claims. And the medium for all of this? The brand new annual report.
You see, the goal had totally changed. The new mission was to reduce something called information asymmetry. It sounds fancy, but it's simple. It just means a shareholder in another city should have the same key facts as the managers in the boardroom. This was all about leveling the playing field to protect investors.
But here's where it gets really interesting. It turns out just giving people the facts wasn't enough. In the mid-20th century, companies realized they could do more. They could actually shape how people felt about those facts. And with that, welcome to the age of perception.
Think of it like a pipeline, right? You start with raw data, just observations. You add some context, and that turns it into information. But the real magic happens at the last step, when you add human cognition, things like interpretation and emotion, to transform that information into knowledge. This isn't just reporting anymore. This is storytelling.
So the focus shifts. The goal isn't just to close an information gap anymore. Now it's about closing a confidence gap. The new objective is to reduce cognitive dissonance, which really just means making sure people feel good and certain about the company's story. It's all about perception management.
And just like before, an entire ecosystem of new professions springs up to manage this process. You get public relations departments, specialized financial comms agencies, financial analysts, rating agencies. All these roles are created to help shape, interpret, and validate the corporate story.
Which brings us pretty much to today, and to a shift so profound it might just be another revolution. This is the age of proof, and it's powered by blockchain. The fundamental idea here is a move away from persuasion. With blockchain, the goal isn't to convince people that something is true. The goal is to provide a shared, cryptographically secured, and unchangeable record that everyone can see and verify for themselves. The proof is literally in the code. The difference here is stark. Trust shifts from one central authority to a whole decentralized network. Reporting goes from periodic updates to a real-time continuous flow. Records become immutable, which means they can't be changed ever. And verification becomes instant and automated.
This creates an entirely new reality, distributed financial intelligence. It's an environment where trust is coded directly into the system. Data is secure, verifiable, and transparent for everyone, all the time, and there's no need for a middleman to vouch for it.
And this isn't just theory. The impact is very real. One study found that organizations using these blockchain-based systems saw a 40% reduction in the time it took to complete an audit. That's a massive efficiency gain, all driven by this new model of trust.
So what does this technology really offer? It's a powerful set of advantages. Unchangeable records, instant verification of transactions, much better data integrity, and the power to audit continuously and automatically, not just once a year.
So, you can see this clear evolution, from providing raw information, what we call informational rationality, to shaping how people feel about that information, cognitive rationality. Blockchain now offers a radical third path, one based not on persuasion, but on verifiable proof.
You know, when you step back and look at these 400 years, you see one consistent theme. Whether it's through a leather-bound ledger, a glossy annual report, or a distributed digital network, the story of finance has always been a quest for a single, reliable source of truth.
So, here's the final thought I want to leave you with. Every single era we've seen was defined by its technology. Now, as the verifiable proof of blockchain starts to merge with the predictive power of AI, the next revolution is already beginning. The quest for truth continues. But what will trust even mean in the chapter that comes next?